Good evening. Hope everyone is doing well today. We have a great show for you planned. Just going to get all of our social media up. Unfortunately, Tawana's not going to be able to be here tonight, but that is okay because I got a great guest for us tonight who is going to come on and join us. Don't forget to put your city and state in the chat so we can recognize you as well. Let us know where everybody is coming from. Y'all know I'm doing my thing here, trying to get us set up on all of our social media here. Today's conversation is going to be about market cycles, which should be interesting and fun. And I've got a gentleman, Dave, who is coming to join us today. Dave is here. So it is 6 o'clock on the dot. We're gonna get started, head on in. Again, don't forget to put your city and state in the chat so we can recognize you. I see here we have our people in Zoom here. We've got Mavis saying good evening. We've got Talisha. We've got Kimberly from St. Louis. We've got Tawana in YouTube from DC. Can we hear you, Dave? No, you're on mute. You might need to change your microphone. We got Stephen here from Atlanta. We've got Vanessa from the Bronx. Hello, everybody. Hello. We got Robin and Facebook from California. Hey, Robin. We've got Lauren in Chicago and Facebook as well. Everybody give us a thumbs up and a like. Let us know where you're coming from. Again, today's conversation is all about market cycles and business cycles. While Dave is fixing his audio, FYI, just a couple of announcements for you. The first is, if you don't know who we are the 10K Project. We are the largest community of investors who actively fund Black-owned businesses. The primary way that we do that is through our Bet on Black pitch, which is every Tuesday at 8 p.m. Eastern Time. We invite a Black-owned business who is raising funding to come and pitch or present their business opportunity to our community. We do our fundraising through something called equity crowdfunding, which is governed by the Securities and Exchange Commission and FINRA. And basically what happens is a large amount of us can put in small amounts of money, $100 each, $200 each, et cetera, and we are able to fund a business in exchange for equity or shares or partial ownership in that business. And if the business does well, then we as the investors get to participate in the appreciation of that early stock investment. If the business does not do well, we only lose the money that we have placed into the company. So if you want to learn more about the 10K Project, you can learn more at the10kproject.com. Talisha has put our link in the chat here for all of Zoom. Also, something else we're doing within the 10K Project is we have all sorts of information about alternative investments that you can get into. Hotels, we are connecting with our person to talk about stocks. We have another person we're connecting with who's coming in the fall to talk about real estate and lead a mastermind around that. We have our business buying group that just bought a business. They're actually going to come and talk about their experience in a couple of weeks. And you can still join that business buying group as well. We have so many things we want to, our goal is to be the curator of all sorts of investment opportunities for Black people, especially. So, you know, if that is something that appeals to you, you are in the right place, the10kproject.com for you to learn more about that, join our email list. The final thing that I will say is that tomorrow night, we do have a session for people who want to learn how to start and grow your e-commerce businesses. So we have a woman coming on tomorrow night who has started several e-commerce businesses and is in the process of selling one of her e-commerce businesses. She also has done a lot on Amazon. They call it Amazon FBA. Don't ask me what FBA stands for, but if that interests you, you want to learn how to set up an e-commerce business, how to grow it, tomorrow night, members only, 6 p.m. Eastern Standard Time. Check your emails for the link. You can sign up on Zoom, and we are going to be here tomorrow night at 6 p.m. Eastern Time for that. And then tomorrow night, there is a Bet on Black pitch session. And tomorrow night, Tawan is much better at doing this than I am, the teaser, but tomorrow night's session is an app for wealth building. I'm going to say that, an app for wealth building. So the10kproject.com, if you are not a member of the 10K Project and you want to either come to the e-commerce session tomorrow night or to the Bet on Black pitch tomorrow night at 8 p.m. So Dave, let's test your audio right now. Can we hear you on your microphone?
Can you hear me?
Yep, can hear you now.
All
Fantastic. Right. So I met Dave through Erica Williams. If anyone knows who Erica Williams is, she brought Dave over to talk with us about stock options initially, but he is somebody who is very well versed in market cycles, business cycles, the stock market period. First of all, this information is not financial advice. It is for informational and educational purposes only. However, tonight's conversation really, I was reading an article in the Wall Street Journal, I think it was, and they were talking about different market cycles and things like, no. I attended a seminar, that's what it was. And one of the presenters was talking about market cycles and business cycles. And with the types of investing that we're doing, whether it's in the stock market or whether it's in the private companies that we are investing in. Every company goes through business cycles and market cycles, and the economy as a whole goes through business cycles and market cycles. And there's not a better person I could think of to talk about this than Dave. So he's on YouTube as Diamond Dave. If you want to follow him on YouTube, Diamond Dave. But tonight we're just going to call him David Williams. So welcome, Dave.
Hey, thank you. I appreciate you having me on.
Absolutely. So hold on a second. Beulah's saying I could not get into the mastermind last week. All right, Beulah, let me reach out to you then by email. Okay, Beulah? All right. So first of all, why don't you tell everybody a little bit about yourself and how you got into stock market investing?
Yeah, so my name is David Williams. So I go on social media as Diamond Dave. And so I kind of got involved in the market because I was doing a lot of media buying, doing a lot of consulting for small businesses. And one of the things I realized is that a lot of them were undercapitalized, and that was impairing their ability to actually scale their business out. So they had good ideas. They could create products. They could also create service offers, but they really didn't have the capitalization. So I was trying to figure out a solution to that problem. And then as a result, me looking for that solution, I found somebody that was able to teach me about the markets and get me to kind of understand the necessity or need for capital, startup capital for businesses. Then from there, me understanding a lot about the market, getting a fundamental understanding, I moved into the derivatives market, was able to get some success as a trader in the derivatives market. And then I started a course called The Highest Paid Part-Time Job in the World to be able to introduce more people to how they can get the life that they desire by leveraging the derivatives market as a tool to generate income. They can kind of start living the life that they desire and not necessarily be tied to some of the limitations of the 9-to-5 situation. So that's kind of how I got to the point I'm at right now today.
Yeah, so I find that there are two groups of people within the Black community when it comes to investing, period. There are ones who are scared of it or think never going to get it, never going to happen. And then there are others who think it's a get rich quick scheme and tomorrow they're going to make $2 gazillion and, be out. Tell me a little bit more about what you're finding, because you have a lot of students that have taken your course. And full transparency, I am a student of Dave's. I've taken Dave's course and I'm part of his Discord. But talk about some of the myths that we as a people especially have when it comes to the stock market.
Oh, the first myth is probably if it takes a lot of money to get involved. And so one of the best things about the equities market is such a low barrier to entry. You're looking at real estate, you're looking at other type of asset classes. A lot of times they take a lot more to be actually participate in. With the stock market, you can buy stocks. You can also buy fractional stocks, but you can definitely buy shares of a company. You can buy shares of indexes at a much lower barrier to entry, at a much lower price point than maybe saying, well, let me go start a business. And therefore, there's a lot of ease to come into these particular spaces that you would normally get, and then a lot of different areas. So that's one misconception that's going to cost a lot of money. Second misconception is that it's a way to get rich very fast. And a lot of people don't have a thorough understanding of it. So they believe in a lot of colloquialisms. And that's natural. What a lot of people do when they don't have an understanding of something that's thorough, it's easier for them to just use a heuristic and just attach themselves to a colloquialism. And then using that colloquialism is how they perceive how this particular situation works. So then we believe it's a get rich quick scheme. We believe all you got to do is buy low, sell high, sell high. And you think that's all you have to do, and you don't really have to understand the space. And so these are some of the things that hold us back because we don't have an understanding, and because we're kind of maybe not as mature as maybe somebody else, we kind of get led astray. But it's really easy because there's so much information available to you now. It's a lot easier to get an understanding of the markets than maybe 20 years ago.
Yeah. Now, when you say that it doesn't take a lot of money to get started, can someone get started with $100, $500, or, because everybody's definition of it doesn't take a lot of money to get started is a bit different. Obviously, you want to offer a range, I know, but I just am trying to get a feel for what you mean by it doesn't take a lot of money to get started.
Well, I mean, if you're looking just to go buy a overall index fund, which is going to be like a representation of the S&P 500, which is going to be the top 500 companies in the U.S. stock market. You can get in for whatever that price is at that particular time. So it can be $500 or less, right? If you're looking to invest in individual companies, which I would not recommend, even though that's not investment advice, unless you have a really good understanding of the market, you can get in for whatever price point it is for that individual company. So Apple stock may be a little bit over $100 right now. So there's ways to get into the market at, to me, which is going to be a lower price point than maybe me trying to get a investment property, where I can get in and start kind of understanding how to get a return on my particular my investment. That's going to be at a lower price point than maybe something else. And so that's one of the advantages of the equities market, is it allows you to very easily get in, start getting involved, and start accumulating these particular assets. Where if, let's say, I wanted to get a real estate property, and I had to either get financed, which could take a long period of time, or I had to get a certain amount of cash to buy the property, it could take a lot longer, which would be a barrier.
Yeah. So 2 other questions before we open up your graphic for the evening.
Okay.
Fractional shares. There was a time when, let's say somebody wanted to buy Berkshire Hathaway. I don't know what it costs today, but it's an exorbitant amount of money for a single share. If you didn't have that entire amount of money, you were out, right? You couldn't purchase. And now people are able to buy fractional shares. If you would explain to people what fractional shares are, and how they could purchase a fraction of some of the more costlier shares that they're thinking of as well.
Yeah, so I mean, let's just say hypothetically something costs $100. So let's say we split that into an even amount of pieces of units, let's say $25 or $20 units. And what they have now, they started recently, let's say over the past 10 years, is apps. And also they had it through some companies had drip programs. And to where you didn't have to buy the whole share, you could buy a piece of it. And then every time you accumulate it, it got you more and more of that piece till you got the whole piece. And I think a lot of people understand fractional now better because of the crypto space. But this is something that really started in the equities game and then moved into crypto. But it's something to where you can accumulate shares in a particular situation, even if you don't have the total amount up front. And then all you got to do is find a brokerage or find an app that's connected to a brokerage that allow you to engage in fractional share buying. Some securities don't allow it, some do. So it just takes the research and then just try to figure out how can I continue to accumulate, even though I might not have the total amount. And so what we're seeing now is that they so much want your money in the market, they're kind of eliminating the barriers for you to get your money into the market because they want the liquidity in the market. So the more people that we can have putting their money in the market, the more liquid it makes, the more ease that people can move in and out of the market. So it's a benefit to everybody.
Yeah. So I lied. 2 more questions. Number one, favorite apps for people to get started, or favorite places where a beginner can go and potentially open up an account.
I don't have any favorite apps. I'm not a fan of any one. I would just try to figure out which one works best for your temperament. So different apps are kind of set up a different way. If you have a brokerage account with somebody else, they may have an app attached to it. So if you're already with TD Ameritrade, or you're already with Fidelity, or you're already with, I don't know the name of the other particular bank, maybe even any of these banks that you may be banking with, they may have an app that allow you to get access to the market. So what I would do is I would just get on Google, take about 2 hours, Google it, download it to my phone, see if I like the functionality of it. If I do, then I will fund it and then just take it from there. And I would make sure, though, that I can transfer the money in that app to another app if I don't like it. Because some apps make that difficult. If you want more customer service or less customer service, you got apps for that. You got some apps to where there's very little customer service footprint, but the app is very easy to use and it's very easy to start using it. You got other apps where you got to have a relationship with the bank first to use their app. It's all in kind of what you're looking for. So I don't recommend anyone. I would just tell a person, be willing to sit down, take about 2 hours doing the research on Google, download the apps, do it on a trial version. If you like it, go with it. If not, there's always going to be another app out there for you.
Yeah, definitely don't put too much of your money into any single app too. Spread it around. So Trina uses Stash. I have Stash too as one of the apps that I'm using. eBird is saying I've been using M1 and have been purchasing fractional shares for the last 2 years. It's definitely the way to go. eBird is also saying great points, do the research. I agree as well. I like Dave's response of, figure out like your temperament, what's going to work best for you, and then tailoring what you need to use based on that. So can people make money in a down market, or because so many people think that you can't. Can people make money when the market is going down?
Yeah, definitely. If you have the skill set, I mean, you can make money in any market if you have the skill set of how to make money in the market. So many people just don't possess the skill. They may have just been kind of educated on buy and hold, and there's nothing wrong with that. There's nothing wrong with accumulation. It's a good thing, especially long term. But the market, the way it's constructed, is really designed for you to make money in every market scenario. You just have to kind of know how to do it. And so what I would encourage people to do is learn how to make money in one scenario and then build on from there, right? Instead of kind of chasing what the scenario is. But yeah, you can make money in the down market. You can make money in the up market. You can make money buying and holding. It's all in your skill set, your perception of the particular situation, and your ability to kind of understand what's going on from a macroeconomic standpoint, and then kind of cater it to the individualized situation.
Yeah. eBird is saying I've used Webull and Robinhood, but I found M1 the best for my needs. Yeah. So it really does depend on what your needs are. Definitely. I'll tell you my funny stock buying story with an app. And I don't know, it just totally like changed my perspective on certain things. The pandemic was happening at the very beginning, and all of the hospitality stocks were going down.
Yeah.
And I'm laying in bed one night at like 11:30 at night, and all of a sudden it hit me, maybe you should buy some shares of, hotels and car and cruises and things like that. And I literally grabbed my cell phone, went on my app, I purchased two hotels, two cruise ships, and two airlines that night,
Okay.
based on the ones that I had relationships with that I felt were still going to be strong companies. My mistake was I also didn't buy Home Depot and Lowe's at the time, but because I didn't think that people were going to be doing so many home renovation projects. And I didn't know Zoom was public, right? But just thinking about it, where when I first started investing in stocks through a 401k, that was impossible. If I had thought, oh, I want to buy this, I would have had to wait to the next business day and then go see a person. And it was literally roll over in my bed, open up the app, click buy, and roll back over and go to sleep. And
Definitely.
I think that, yeah, like what you're saying, that they want people in the market now, no matter what. And crypto has changed, especially for young people. It has changed the way that business is going to work and operate. So
Yeah, definitely. And one thing I want to tell the audience, and this is something I always try to really get people to understand, is that even if you don't want to do, let's say, so I'll take it from my perspective since I can't give investment advice.
Mhm.
If I didn't want to study individualized companies, but I still wanted to be in the market, I would just buy indexes. So many people, and myself included, may feel like, well, you know what? I don't want to study an individualized company.
Mhm.
Therefore, I could still participate in the market if I just bought an index. And if I was to buy an index on a regular basis over a 20, 35-year period, I'd be in a better financial situation at the end of that 35-year period than I did if I never bought one. And so that's what I want people to understand, is that I would, on my own, for my own personal situation, if I didn't want to sit down and do the research and I wasn't passionate about the market, I still would see the benefit from having some capital in the market, because I can get the appreciation long term based on how this particular society is set up. And it's set up
Mhm.
for the market to continue to go up over time and for capitalism to expand. That's how it's designed. So we will have times of contraction, but the long-term scenario is that it's designed to go up. It's designed to expand. The credit markets are over time going to become more and more liquid, which would allow more growth of companies. So I would see it as it would be better for me to be in a long-term in an index fund as opposed to not being in it at all, because I didn't want to research individualized companies.
Yeah, I think that is great advice for people. It's okay to um, just have a long-term horizon, buy and hold for 20 years or however long, and get the appreciation as well. So why don't we start with, do you see the share screen at the bottom
Let
of
me see.
Zoom? Or do I need to give you the
I see the
hosting?
share screen.
Okay, so everybody, Dave has a graphic that he's going to show us. He's going to talk about market cycles now. So
Okay,
whenever
so
you're
yeah,
ready.
I don't have the graphic on my end because I'm on a
Oh,
different computer.
let me
Okay.
pull it then. That's
All right,
fine.
sorry
I'm
about that.
sorry. I thought that you.
Yeah, because I work off a Mac and a PC, so I normally do my live streams off my PC, but I normally
Okay.
do like my work off my Mac.
Okay, that's no problem.
All
I
right.
give me a second here, and I will be able to pull it up. Okay, let's see. And
Okay.
is that big enough?
Yeah, it's big enough. I can see it.
Okay. All right, whenever you're ready.
Okay, so we want to talk about. You want me to go into the psychology of the microcycle?
Yeah, and just, giving people any information that they can think of as they are thinking about the market on a macro point of view, or
Mhm.
from an individual company point of view as well.
Okay, so what I would encourage people to do is to look at a market cycle from a macro standpoint. So if you're going into business, right, you want to understand the market that you're in and then how the business fits into that market. So a business has a business cycle, but the business exists inside a market cycle. And a lot of people can't separate the two. And a lot of people start businesses and don't ask themselves, what is the cycle, right, of the market that I'm getting ready to go into? So let me give an example. We know about like the fitness space, right? So let's say 6 months ago, I'm gonna give you 2 examples. 6 months ago, if y'all remember this supplement called a Kai Berry or a K Berry, whatever it was called. Okay, so let's say 6 months ago, a Kai Berry came out as a weight loss solution. So now there's a new market created around a Kai Berry. Okay, so the market is created for this particular supplement. So there's a market, and then there's businesses inside that particular market that are serving the market for that supplement. So we got a market cycle overall. We got a business cycle that's embedded inside that market cycle. This has been going on for 6 months. You're now looking for something to do business-wise. You say, hey, I want to go into the fitness space and I'm going to sell this Acai Berry. If you don't know where the market is at for that particular solution, you may be entering the market on the downside of the market, or you may be entering in at a plateau, right? And so what you want to understand is, where is the market at the time that you enter, because it may not even be worth you going into business and spending the capital, because the market may be declining, it may be compressing, it may be on the downside, it may be plateauing, and it may not be worth the work that you need to do to get into the market, right? And then there's barriers to entry, things of that nature. But what we see with a lot of markets that have a very low barrier to entry, they have very fast cycles. Why? Because everybody and their mama can come in. A lot of markets that have a higher barrier to entry, where they're going to take a lot of capital, they're going to take a lot of access, knowing different people. You may have to, grease the palms of politicians, things of that nature. They normally have a longer lifespan. Why? Because it's next to impossible to get into it. So let's take an example. It's next to impossible to get into the energy market. If you wanted to get into the oil market or the coal market, next to impossible. Not only do you got to have a lot of money, you got to know the right people. So that market can sustain itself for a very long period of time. Why? Because there's just not a lot of competitors in that market. It's almost impossible to get into that market, right? Not only do you got to have access to the energy, you got to have a business around it to extract the energy. Takes a lot of money, takes access to capital, takes knowing the right people, takes permits, things of that nature. Another example, there was something that was being sold on Facebook about 3 years ago called, we call them like they were fidget spinners. There was this product from China, and you could like press a button and it would spin like a rotor, and it was like a toy. Okay, so that came out. Once it got hot, everybody started selling it because it was hot. So what happened? It went away real fast. Why? Because to sell the product, all you had to do was go on Alibaba, order it, run some Facebook ads, and now you can sell the product. So what happened? Everybody was in that market. So the cycle for that market was very, very short. So then if you come into that market trying to sell that fidget spinner and you're on the tail end of the market, you're going to spend money to get the product. You're going to run the Facebook ads, spend money for that, without understanding is that the market is already going down. So any sales that you get are going to be smaller than the people that came in at the beginning of the market. Then we could go a lot deeper into how to create markets, things of that nature. That's more of a marketing standpoint. But you always want to look at the market cycle that you believe you're currently in. And it sometimes it may not be worth it for you to even go into the market at that time, unless you know how to do something that we call in marketing called create your own market. Most people don't know how to do that. So they're going to be dependent upon what market that's currently going on and their understanding of the market, because they really don't have the skill set to create their own market, which is like a marketing skill. So looking at the overall market cycle, because I don't want to be too long-winded with that. First market, right? We're coming out of a down market. So we're already in a disbelief, right? And then we go into a disbelief into a hope, right? So we see that price is on the left side, time is on the right side. So it's like a basic XY axis. Once the market starts going up, we get optimism around the market. So we get optimism that this market is actually real, it's legitimate, it's valuable. As the market starts to go up a little bit higher, we get belief in the market because we start to see people making money, people becoming successful. Then we get the thrill of the market to where, okay, everybody I know is making money in this market. It's the hot thing to be. Then we reach a euphoric stage where what? Everybody and their mama's making money in this market now, right? I mean, just people that really have no business being in this market are making money in this market. So we saw this in the real estate market like 06, 07. People's making money hand over fist, and they were manipulating the system to bring people into the real estate market that really shouldn't probably be in the market. Then you get what we call the market starts to plateau. People start to get complacent because things have gotten so easy, right? And the market takes a little bit of a downturn because what's really happening is that the smart money is getting out of the market now. They realize this market is run too long, it's run too hot. It's time for me to start getting out. The people that really don't understand what's going on, they still think the market's going to last forever. Then the market starts to sell off. So now you start getting anxiety. How come I'm not making the same kind of money I used to make? It's tougher to make money. I'm starting to get lower and lower margins. I'm starting to do more work to make less money. Market continues to sell off. It continues to contract. We get a denial stage, right? Then the market starts to slam down. We get a panic stage where people now are really fearful that I'm not going to get my money out of this market. I'm not going to be able to recover the loans that I took to start this business, yada, yada, yada. We get capitulation where everybody just gives up and says, okay, you know what? This market is dead. We get anger because a lot of people lost everything they invested in this market. Then we start back over again. We go back into a depression stage where people are beat down. Then the market starts to go back in an up cycle. We go back into a disbelief where people really don't believe it. And we start to cycle all over again. So that's every market, right? It could take 20 years. It could take 10 years. It could take a year. It could take 5 years. It could take 90 days, but it's normally going to operate on that same cycle. So then within this overall market cycle, you're going to have a business cycle for a business that essentially is going to do the same thing. And that's why you kind of want to understand that when you're entering into a market, what is the stage of the market that I think we're currently at? And how long do I think, what is the sustainability of this market to where is it worth me going into the market, spending the capital, doing the work it's going to take, because this might be a short-lived market. So let me give an example. When I was coming up, rap was starting to get really big. My parents told me rap was going to be a short-term thing because they had seen disco. That didn't last long. I don't know what the music was before that because I wasn't around. But they told me, well, rap ain't going to be around a long time because these people are not going to be able to do this when they get old. But what do we see? People are still rapping while they're old and rap is still here. So a lot of people didn't really get rap because they thought it was going to be a short-term market. But we found out that rap is a long-term market. It's very sustainable. Even though it's mature, there's still money in it, even though there's not money in music like there was 20 years ago, but the market has still maintained itself. You know what I'm saying? So that's the thing, is that a lot of people, they don't really understand the cycle of a market when they go into it. And they think that, well, because everybody else is doing this, it's going to be here forever. It may not be, but also it may be. The real estate market's not going to go anywhere. It's just going to go up and down. But the real estate market inside of the United States is very mature. So in that maturity, you're going to have dips, you're going to have peaks and troughs. But the real estate market inside of the United States is not going anywhere because of the demand for real estate. So Sherry, you got any questions about what I just explained?
Yeah, so you said so much. One of the things that I think about is, I'll give another example of a market cycle, and that is different types of social media. And every time there's a new social media that comes out, there are early people that get into the market, and then there are people that start teaching how to make money on the new social media. And then there are all sorts of apps that third-party apps that target that social media, et cetera. So MySpace was first. And I really wasn't into MySpace, but you had people, bands, artists, people like that who made a lot of money from MySpace. And then Facebook happened. And, you know, with the evolution of Facebook, you started to see some people make a ton of money with Facebook. get millions of followers. You saw a whole new industry with Facebook, et cetera. And then Facebook started to cool off. It got more mature, et cetera. Then people moved to LinkedIn, and now people are moving to TikTok, and it's the same thing that I'm seeing with the market as well. And it's also harder for people to garner attention on these different social media platforms as well. So some of the anxiety and panic that I'm starting to see people have with why isn't, my Instagram account growing or my Facebook account growing as quickly. I'm seeing that just from people that I've been speaking with. The other thing is, in the last recession, I was full-time in my business as well. And in the last recession, we saw a lot of our competitors go out of business. And it was the same type of thing where things were, tight. And there were quite a few competitors that started panicking and they got out of the market. But historically, some of the strongest and best companies have been started in a recession as well. So out of that valley that you have there, you have to do certain things in order to make it through, start in a recession and make it through a recession. And I think that that those, philosophies are very interesting as well, as we're looking at this graphic that you have here and just kind of thinking about it. The other one that I'll bring up, I don't know how familiar you are with the metaverse and
definitely.
NFTs. So right now you are seeing, and let's take Bitcoin as well, more than some of the other cryptocurrencies. You do have this loop continuously happening with Bitcoin and cryptocurrencies, and you're starting to see, people getting into, like, companies getting into the metaverse, and there is, a bit still of disbelief. What is this thing going to look like, et cetera? So you only have your early adopters in there now, but there are going to be some big companies that come out of the metaverse, and they're going to make a ton of money as well. Let me ask you a question. This is my understanding. There is, well, is there something to small investors like us getting in too early within these industries? I have heard that from other angel investors that, sometimes within these new markets, they can get in too early as well. Do you have any thoughts with regards to that?
I mean, if it's a valuable market, you never can get in too early. The question is, how long can your capital sit there? So if I get into a market, so let me give an example. Mm-hmm. All those little nerdy guys that got into Bitcoin, 06, 07, 08, they're millionaires now. But Bitcoin was very difficult to get. It was very difficult to even accumulate them. You had to know special software. You had to know a lot of code. So it was hard to actually get the coins, but they was buying coins for 50 cents. So, but they sat on those coins for almost a decade. Mm-hmm. So they had the capital they had a technical understanding. Then there was actually a valuable market for it. Then they had the capital to park it for a decade. I was telling everybody, I remember when I was getting ready to get out of my car, I was in Austell, Georgia, getting ready to go get some Chinese, and Bitcoin had just, like, 2012, maybe 2014, in between those years. And Bitcoin had just sold off to maybe like $300. And I was like, oh, Bitcoin's over, right? Mm-hmm. Well, I should have bought $10,000 worth of Bitcoin that same day.
Yeah.
But I didn't have the technical understanding of even how to accumulate it, because it wasn't until maybe 2017, 2018, when you had the brokerages that made it really easy, because you could buy the Bitcoin and sit it on your computer. When I was looking at buying Bitcoin, you had to keep it in a cold wallet. I didn't want to learn all that technology and learn how to do it. I just was too lazy. Mm-hmm. So my laziness meant I wasn't able to benefit from that situation. I don't think you can get into early if it is an actual valuable market. Now, you don't know it's a valuable market until maybe 6, 7, 10 years down the road. But if we look at this particular graph, They show you the trough. That's the point of maximum financial opportunity, right? So you a lot of times have to get in at the bottom because that's what a maximum financial opportunity is, because there's very little competition to get in.
Mm-hmm.
As we start to go up and everybody now realizes it's a great place to make money, now big capital starts to come in. You got more competitors, more people in the space, especially if the barrier to entry has not been formulated or created to make it difficult to get in. So I wouldn't say you can get into early. My question is, how long can you sit in your position and maybe not be profitable? How long can you park your money? You see the same thing in real estate.
I was going to
You
say
may buy
that.
real estate and sit in it for 15 years. Some
Yeah.
people can do that, some people can't.
Yeah, I was going to say that same thing, because there was somebody I was speaking to earlier today whose family has land and they want to get rid of it, and it's in Nashville.
Yeah.
And this person is like, I've got to get some cash together so that
Exactly.
I can buy this, because my family just wants to sell it to whomever,
Yeah.
And he recognizes the value of that if they're able to hang on to that land that is family, it's been in the family for however many years. Then, he could build something on it eventually, et cetera. So yeah, Beulah's asking a question. Beulah asks this question quite often, but we'll ask your thoughts on it. She works for the state, and in 2008, she had her 401k. The associate in the state came to her and to other people and said, "Don't retire, ride the wave." And unfortunately, her 401k hasn't risen very much since 2008. So Dave is not a financial advisor, Beulah, but I'm going to ask him, your question. Any thoughts with regards to, how people can look at the market right now and adjust accordingly with regards to their 401ks?
Yeah, so I would ask her what her 401k is in, because if her 401k is in the overall S&P 500, she should be coming off a great 2-year run, right? So since '08, they started massive quantitative easing, started making the markets extremely liquid. We had one of the best, almost '08 to 2018, one of the best 12-year runs in the history of the US stock market. We dumped because of the pandemic. We had one of the best 2-year runs in the history of the US stock market. We just sold off pretty much over the past 6 months. But what I'm trying to figure out is that if she was in the overall market-based fund from '08 until now, she should have been able to recover what she lost, at least some of it. It shouldn't have I never recovered, because after '08, to save the economy, they did massive quantitative easing with the Obama administration and the Federal Reserve. So that allowed the markets to shoot up. So if you look at the overall indexes, they've shot up since '08. So what I would just ask her is, what is she invested in? And then if she doesn't know what she's invested in, I would tell her to get with a certified financial planner or get with an investment advisor that's licensed, and have them break down what you're actually invested in. Because if you're putting money into that 401k every time you get paid, you, one, should expect a return. And then two, I would encourage you to know where your money's going.
Yeah. So Beulah, I don't know if you have Freeman Capital's package yet, but that is a suggestion for you if you need a suggestion with regards to who to speak with. Ebert is saying they aren't making any more land, which is true, even though Kamari Ellis did say that Dubai is, we call it an example of how they are making more land. He was talking about how they turned this desert into, the city that it is now, and people have made millions, billions of dollars off of the land that was created, habitable, land that was created. Ebert is also saying we have to be aware of FOMO, which is fear of missing out, and stick to your plan. And I like that as well, because each person's plan is going to be different based on your age or risk tolerance, what kind of investments you're into, things like that. So I like that. He's saying that. Trina is saying, question, I own a 10,000 square foot building for which we have a private vocational school for which we are now 100% virtual and do not need the building. My son insists that it is a liability and not an asset. It will be paid off in 2 years. Congratulations, first of all, for that. He keeps bugging us to sell and invest the money somewhere else. What are your thoughts? Did your son put in any money for this, Trina? That's my kitchen table talk. Why does your son have a vote? But I'm just being silly with you. What are your thoughts, Dave, with regards to this question?
I mean, I would encourage the person that thinks that the money can be used in a better place, like create like a financial plan and explain what they mean by that. And then two is how come you can't cash flow the building? So if the building has a use, can you cash flow it? What if it is a liability? How is it a liability? It should be able to be expressed in numbers. What makes it a liability? And then can you cash flow it? And if the family member has a better plan for it, can they present it to you in numbers? So if we sell it, we can put the money here and we can get back this return over here, as opposed to keeping the money in this building and it's not generating any cash flows and it's costing us this amount of money per year just to maintain it. And then, you got to come up with some type of comprehensive plan. But like Cherie said, it got to be kind of based on your goals.
Yeah.
Real estate is kind of really based on that because you can have property that it can take some time and then it just blows up. Because I know people from New York, the New York area. And if you look at Dumbo, in the 90s, nobody wanted to live there. Now it's a hot area.
Mm-hmm. Always happens. So Trina is saying, not a dime did he invest. He is an only child. And as someone who is an only child, yes, we do. We are opinionated. Yes, that is true. But I like Dave's idea of then, present an alternate plan, especially if this building is going to be paid off in 2 years.
Exactly.
And it's someplace, where you can own it 100%, you could leverage that building, for other things as well. Use it as collateral for other investments, things like that. So yeah, look, you basically have a family bank and a family investment club there with you and your son. I don't know, if you have other family members, but I think him coming to the table with a plan and the numbers as well, and whomever the stakeholders are, vote on it. Or if you're the only vote, then you're the only vote. But I think that that's great. Talisha's reminding everyone to take advantage of the 10K Projects partnership with Freeman Capital. That's the financial coaching group. Use the code financial plan 450. And if you are already a member of the 10K project, you log into the Knowledge Center, you go to my account and you click upgrade and you can use the code financial plan 450 as well. Sauda is saying, I'm retired since 2011 and have not touched my deferred compensation and haven't put any more money in, just letting it ride. I have a pension. My husband has the same, retiring after me and is doing the same. What are your thoughts and about if we pull it out, how do we not be taxed to death? Well, Dave, you're not a tax expert, I don't think. So my suggestion would be for you to speak with a tax professional. If you want a couple of options, either talking to Freeman Capital, they may be able to suggest somebody to you. Or a couple of weeks ago, we had Kamari Ellis on, who is a tax professional, and he is able to talk with you. Or there may be some people in the expert directory within the Knowledge Center. If you go in to the expert directory, put in taxes, there's Florice Gregory, who is one of the accountants within the 10K project, and there may be some other people, but that's a very individual question, and you probably want to have somebody look over everything for you in order to give you good advice for that. What are your thoughts about HELCO for financial investments? Is it HELCO or HELOC? Anonymous, can you rewrite that question for me, please?
Okay.
Make sure it's not HELOC that you're talking about. Sauda, you're welcome. You're welcome. While we are waiting for Anonymous, Dave, why don't you talk a little bit about your course? Because you teach people uh, how to trade options. So first of all, explain to people what options are, and then let people know about your course as well.
Okay. So an option really is what we call a derivative of the actual foundational asset or the fundamental asset of the stock. So you got the stock market, you got the derivative market. And what the option really is it gives you the option to do something and not to do something. So you have the choice to do it, but you don't have it. So you're not obligated to do anything. And so this particular course was created for three people in the society. The first person is the person that don't like the fact that they got to take a lot of time away from their family to make the money that they make. Second person is the fact that I work at 9 to 5, but I don't necessarily make enough money. Third person is the fact that there's a cap on my income. So at the beginning of the year, I know how much money I'm gonna make, even though inflation is going up, but my pay's not. And we wanted to try to figure out how to help people solve those problems by getting them to understand the financial markets and how they can leverage it. And we've been successful with that. However, our ideal client is a person that likes to read. They like to study business. They really want to understand the market, and they're not looking for a get rich fast scheme. For many of us, it's going to take a certain amount of time for us to be able to have conversations about the market. But we've been successful with people that want to go through that process. And so we have the course, also got the Discord, also do a bi-monthly class, twice a month, bring people on the live stream, and we have conversations about the markets. Because one of the biggest challenges we have is that we don't necessarily talk about the things that are going to allow us to be successful in the markets. We just try to do it, but we don't know anything about it.
Right.
So that's pretty much what the course is based around. It's self-paced, so it's essentially online modules. You're self-studying. You can ask me questions through Discord. You get a 1-hour consulting fee with the core course. You get about 5 hours of consulting with the VIP. And I'm very passionate about it because I've been able to understand, by me understanding the market, understanding the derivatives market, how it's been able to change my life, and also how it's been able to help other people. And the goal of the core course is to get you to 20K a year through the markets, which is really not that hard, but there's a process. And if you're committed to the process, I'm committed to helping you.
Yeah. So I purchased Dave's course a while ago. I am in the Discord group, and he does have a couple of times a month. He has members only sessions where the members do talk about the market. And there are so many things that we read that we either may not understand, or more importantly, may not know how to apply the information. So Dave actually sends us, a link with like, what are your questions? And we're able before class to enter, like, this is my question, this is what I read, can we talk about this? And he does the best he can to answer all of those questions and kind of just help us get unstuck. So if that is something that you're thinking of that you want to consider, then Talisha has put the link in the chat here within Zoom. I'm going to put it in our other social media. In the meantime, Anonymous did let us know it is a HELOC, which is a home equity line of credit. So Dave, what are your thoughts about HELOCs for financial investments?
I would encourage them to speak to a real estate professional and get somebody that has experience in that particular space when it comes to a HELOC. And I think they can offer that type of consulting.
Yeah.
Because that's something that's very specific. So I wouldn't want to give him like a general answer. Or, he could sit back and hit up the Google, get really familiar with what a HELOC is and what it actually is about, and then go speak to like a real estate professional and just give the real estate professional the specific situation that the person is in and whether or not they think a HELOC would be appropriate for that specific situation.
Yeah. So I will tell you this, and this is not financial advice. This is Cherie's path to financial independence. And I saw my father do this, and I'm like, that is the way that I want to go.
Okay.
When my father retired, his house was paid off, his vehicles were paid off. My father was a musician in the church. So outside of Social Security, he, played in the church, and that was how he earned his money. He was in relatively good health until the last few years of his life. But because of that, he didn't have any debt, like no real credit card debt or anything like that. He was able to retire at 65, and he lived another 13, 14 years, pretty much fully retired, playing music with his gospel band and in the church, right? So I see a lot of people, Grant Cardone and some others, I will name names, that are telling Black people don't own property, don't buy your house, um, or take your house and leverage it to the hilt and then put money into apartment buildings and things like that. This is what Cherie is doing. I'm not telling you what to do. Cherie is focused on how can I make as much money as possible to pay off my house. And I do not intend to add any more lines or any lines of credit on my house. Um, so, you know, it does, obviously, it does depend on you and what your risk tolerance is and what you're trying to achieve with your life. But that's just me. I just want a situation where nobody can put me out of my house unless I don't pay the property taxes, you know, and that's just me. So, Ebert is saying, Dave, have you used the Tasty Trade options platform? And if so, what are your thoughts?
I have not used Tasty Trade. I know about them. I've watched their live streams on YouTube a few times, but haven't never used them. They're not who I use as a brokerage to trade. So I'm familiar with them, but just never used them. I know people that use them. They like them, but I've just never used them at all.
Perfect. In YouTube, hi, Nurse Juris Doctor. Everybody in YouTube and Facebook, don't forget to like the video as well. Really appreciate it. In Facebook, Romy is saying for a HELOC, it depends on your lending rate and the expected rate of your investments. Great to take advantage while rates are low. So that is Romy's suggestion in Facebook. But definitely, I still suggest people talk to your own, you know, financial consultant, because everybody's situation is different. Yeah. So, final thoughts for the evening. So I'm going to put back this here. Ooh, did I get rid of it? Oh, I wanted to show the market cycle thing again. Give me 1 second.
Okay, no problem.
I want to show it and then have you comment on it as well. For whatever reason, I closed it.
That's all good.
Okay, so yeah, so everybody, tonight's conversation was about market cycles and us being able to recognize market cycles, knowing when we potentially may want to get into the market, get out of the market, and understanding that that there's a macro environment, there's industry cycles, you know, there's crypto cycles, things like that. Dave, I want to give you any last words of advice as people are looking at this market cycle one last time.
Yeah, I mean, I would tell people, and what I would encourage people to do is ask themselves a question: what state of the cycle are we currently in? You know, just ask themselves. So, as opposed to letting somebody else, one of the things that we do is because we're not really in the markets like that, and we're not having the kind of conversation that you're having here. So not your audience, but the mainstream, is that we're kind of oblivious to what's going on around us. And if somebody will come to us and present us with an offer, and because they're a salesperson, of course, they're going to make it sound like the best thing since sliced bread. We need to be able to look at that offer, especially if it's business related, and say, okay, well, what cycle of the market do I think we're currently in? Is it worth me spending the time, money, the capital, the resources, my access, my political capital, my social capital to enter into the market at this particular time for this endeavor? We talked about before, real estate's going to be here when we're gone. It was here before we shot here, but real estate has peaks and troughs. So real estate market right now is topping out. So if you're getting into it, it could cost a lot more money than maybe 3 years ago. So we just got to understand those things where maybe something else, you may be able to go in at the bottom of the market and ride your way up. But just because you're at the bottom doesn't mean it's ever going to go up. You could be at the bottom and 50 years later, it could still be at the bottom. So we got to kind of ask ourselves, what stage of the market are we in from an overall macro standpoint? Then looking at that particular company, what stage of the market do we think that company is in? Because one of the things we talked about in the slides that you sent me is when you start a company off, you're at that emerging stage. It can take a lot of capital.
Actually.
Yeah, and it can take a lot of time to what we call, we call it the hockey stick curve. They had a little bit of different curve on the slide, but when you first start that company off, introduction stage, low sales, high costs, little to no profits. This is where most people fail. Why? Because I'm undercapitalized. So when I'm spinning my wheels, but nothing's coming in, is where most people fail. This is why most businesses fail. Most businesses don't fail because people are dumb and they're lazy. They fail because they're undercapitalized and they can never get out of the introduction stage. I study the markets a lot. I don't want to get on my soapbox, but it amazes me how many badly managed companies with terrible offers, but they get capital, so they're allowed to hang around, right? So, we see this over and over again, and the only reason they're allowed to go into a growth stage is because they're capitalized. And they're allowed to figure it out sometimes, or they're allowed to just go out of business and it starts all over again. But we got to understand the overall market. Then for the individual company, what stage is the company at? Because most people, they leave the market in the introduction stage. And the biggest reason is they're undercapitalized. It's not because they're lazy. It's not because they don't have a good idea. It's not because they don't want the business to be successful. They don't have the capital to get it into the growth stage, which even takes even more capital. And so that's why I'm a proponent of what you're doing here, because we got to not just understand businesses, but we got to understand capitalization.
Yeah. And so I will say that being undercapitalized doesn't necessarily mean you have $3 million to start your business either. It could be properly setting up your pricing from the very beginning so that as money comes in, you can operate the business. So I'm working on a business plan right now for a client. And when they first came to me, their business model, when I put it into my financial model, I'm like, you all will never be able to make any money with this business model. So I had to strip it out and start all over again, to the point where when we redid the numbers, and it's like, okay, you get X number of clients and you will have enough capital that they'll have to do a second raise because of the type of business that they're in. But after the second raise, if they never raise any money again, they can survive. A lot of businesses overextend themselves with expenses as well. You have too many expenses in the very beginning. And if you had not had as many expenses in the beginning, then you could have made it through the introduction stage as well. So that's one of the reasons why I'm a big fan of lean startups as much as possible. So, but yeah, I mean, the whole point is to get to the maturity stage. And sometimes you move from maturity back to growth, so, and back and forth, you'll end up kind of oscillating as well. So
it definitely, you can stay in maturity. If you look at businesses like Coca-Cola, PepsiCo, they've been in the maturity stage over 50 years. And one of the ways in which they stay there is if they see that somebody else has a growth company, they just acquire it. That's something that Facebook was trying to do.
Yes.
Now Facebook now going into the metaverse, which means they're going to go back into a growth stage. But when Facebook acquired Instagram, they acquired WhatsApp, they were really at a maturity stage, but they were trying to get those growing businesses and they didn't want to develop them themselves. But because they had the capital and they had the money in the bank, they just acquired them. So I think once we understand it, you gave a really good point about understanding how the business is constructed, because one of the characteristics of the introduction stage is that a lot of people have high costs of very little to no profit. And a lot of it is how the business is composed. But see, when some people are in an environment to where the money just flows to them, so they don't have an incentive to run the business lean. So we're seeing that with some businesses now that the cost of capital is going up, they're going to have to kind of restructure their business because it's going to be a lot difficult for them to get access to capital they may have gotten over the past 4 to 5 years. So
Yeah.
I'm a real big fan of you getting people to understand like the lean startup model and kind of understand how to utilize and make best use of the capital. But the structure has to be correct to where we can take it into the growth stage to where we can start accumulating more, we can grow and also scale up our capital use.
Yeah. And as angel investors, we want to be aware of this as well. When we have companies that come and pitch us for the Bet on Black pitches, most of them thus far have been in the introduction stage. So we are looking at low sales, but some of them have sales, right?
Yeah.
But what stage of the process are they in? And do we foresee them actually hitting the maturity stage? And at what point and how do we do that? Or how are they going to do that, I should say? Anonymous is saying, we are not taught this information. I still am challenged to get an understanding. Well, Anonymous, you're absolutely right. We're not taught this information. My attorney taught me a lot of information about running my business. And I think that one of the things that people say about actually working underneath people who are 3 steps ahead of you, who actually will mentor you, who actually, like, I have a couple of people who have sat me down one-on-one, closed doors. I could ask all the stupid questions that I wanted, and they really broke down business to me. And a lot of them were not Black. Not to say that Black people can't do it, but a lot of the most impactful lessons that I learned came multiculturally from other people of other races, and you know, Jewish men and white men, and you know, et cetera. So having those relationships are important as well. Anonymous is also saying, what are your thoughts on investing in Ford Plans, Martin Television? I don't know what that is.
Yeah, I don't know what that is.
You know what? Okay, I don't know what that is, Anonymous. You're gonna have to do some research on that. Thank you, Talisha, for continuing to put the link in there as well. So that is our time for today. Don't forget tomorrow, 6 p.m., the e-commerce session is tomorrow, 6 p.m. If you want to learn how to start and grow your e-commerce business, check your emails for the Zoom link. It is members only. And then tomorrow night, 8 p.m., Bet on Black pitch. Other than that, Trina's saying our 30 years in business, it's unfortunate, but the case for us as well. Oh, what happened with your 30 years in business? You're saying
it's a good amount of time to be in
unfortunate.
business.
I'm sorry?
I said that's a good amount of time to be in business.
That's a very good amount of
Exactly.
time to be in business. Maybe it's just time to reinvent yourself, Trina.
Yeah.
And that's okay. Oh, Roland Martin TV station. I'm not gonna.
I didn't know that was. I didn't know that was a publicly
I
owned
didn't know
company.
that was a thing.
Yeah, I thought that was just an independent TV
Okay,
network.
so you know what? I am going to answer your question. I'm going to answer it like this. Do you believe Roland Martin TV station can get to the maturity stage? That's all I'm going to ask you. Really doing your analysis and asking, can it truly go from introduction to growth to maturity stage? And if you do your research and you believe it can get there, you know, not financial advice to you, but that's how I would look at it. That's how I look at every analysis. I look at the team. I look at the market opportunity, the market size, the power of the team, and the reasonability of the financials. So, Dave, you want to respond?
Yeah, I mean, and you gave some really, really good points, and I really appreciate your insight, because I do the same thing. I was talking to somebody the other day. They were talking about this company that has the robot arm that makes the burgers.
Yeah, the cooking one.
Yes, ma'am. So they were talking, and I was saying, look at the team, look at the balance sheet, how much money is actually inside the company, because we want to know what does it cost to actually run the business.
Mhm.
The actual market that they're going after. They think they have partnerships with 200. So with Roland Martin, I know Roland Martin knows the news game, but what I would look at is that what is the market for that type of model? Because
Mhm.
we saw it with the, I think it was the BNC network. Their model to me was a little ambitious, but I think scaled down. And you just talked about running it lean. And one thing Roland did a video after that network has some issues. He talked about running the business very lean. I
Yeah,
think Roland gets that. My
he
question is,
does.
what is their model, Roland's model? And what is the overall market opportunity for that type of platform? Because one of the biggest challenges I see with those type of platforms is they're very dependent upon another platform to get capitalized. So
Mhm.
if we're on platform XYZ and that platform doesn't uh, uh, benefit us enough financially to be on the platform, then how are we sustainable? It's
Yeah.
different than back in the day to where you could take the show and sell it to a network and they would give you money up front for it.
Mhm.
Now it's streaming revenue has to generate money. The challenge is that, well, what if they lower the ad rates? Then where does the money come from to keep the show going? Now, if he just keeps a lean model, and regardless of how much money comes in, he keeps a lean cost structure, they can make money hands over fist. But if they try to expand it, is where they can come into issues because they can expand it, but the revenues start getting cut. But now we already in an expansion mode. So those are kind of questions I would ask.
So I will say my comment about the BNC.
Yes, ma'am.
I tried to look at some of the videos, and the things that they were talking about was not of interest to me. And I was, listening to other people, like the stories that they were talking about were not mainstream Black stories. They
Okay.
were Fox and MSNBC and CNN talking points with blackface on it, in my opinion. So, you know,
Let me when
that
you get
that
done.
that goes to the market opportunity as well. And if Roland Martin is going to be able to capitalize not just on the lean model, but on what are Black people really going to tune into, and is that going to also mesh well with whatever advertising corporate sponsors he's trying to get? So,
And let me. You gave a really good comment because I spoke to somebody that runs a media network in Atlanta, and we said the same thing. But
mhm,
so I love this conversation because it's more of a marketing conversation.
yeah,
They thought that that messaging would work. So because of what's happened over the past 8 to 12 years, mainstream,
mhm.
they thought that we could be a Black version of, like you said, MS. The media was trying to be like a Black version of MSNBC.
They tried to be,
Yeah.
yes, and it was
But the problem
awful.
is
It
there
was
wasn't an
bad.
audience. And what I thought they should have done, what I would have tried to do is build shows around the personalities
Mhm.
where you got to, so if it's going to work because of the personalities, not because of the actual news. Because nobody cares about news. What people want is somebody that they have an affinity for to tell them what they want to hear. And to me, we never really tried to develop the affinities for the personality. They were just like talking heads. That doesn't work in news anymore. That's how it worked when I was a kid. It doesn't work like
Mhm.
that anymore. You have to have the personality be the person where I agree with what they say and they tell me what I want to hear to confirm my whatever you want to call it bias.
Your bias, and deliver it in a way that's that's entertaining. So I felt like BNC, um, they also talked a lot about critical race theory, which I no Black person that was in my circle was talking about CRT, like at all.
Yeah, yeah, I know what you
They
mean.
kept talking about that
Yeah,
every day. And
yeah,
then the stuff that I felt that was important, they weren't talking about, or that was relevant to our community. I didn't feel like they were talking about it. So that also goes into the market opportunity as well. And you're right. A lot of the people now like analysis. They like that Rachel Maddow
yeah.
type of feel, or Tucker Carlson.
Yes, ma'am.
Love them or hate them, these are the people that are doing the best.
Yeah,
But look in the Black community, underground on YouTube, a Jason Black, for example, or Tariq Nasheed, these are the people that are pulling the numbers, and you have to
exactly.
ask yourself why, you know.
Yeah, they're big time personalities, but the issue is that so if you look at like the root, if you
Mhm.
look at I forgot the name, I forgot the other name of the other in online platform. That's in line with their same kind of content.
Degrio.
Degrio. So in their mind, there are Black people that want this kind of content. Like there's a segment of the population, but like you talked about market opportunity, I
Mhm.
think the Black people that wanted that content are really such a small group, but for some reason they've been pushed to the forefront. But I don't know anybody in my family that's talking about critical race theory either. Like I don't know
Nobody
anybody
was
that
talking
even
about
did. I
it.
don't know. And they did make that one of their big points. But
Mhm.
I don't get it. I don't understand. The guy that started it was such a successful business person. I didn't get why that didn't work or didn't have, it wasn't kind of to me fleshed out the right way. But I think when
And it could have been
other
some of the
people,
investors that he had as well. Sometimes when you bring outside investors, and when I say outside, I mean outside of our ethnicity,
yes,
which
ma'am.
is what he had, and you had outside advertisers, then that muddies that waters down the content.
Yeah, I get it. Yeah, I just never understood where they were going with the content. I couldn't watch the show because
I could
their
imagine.
stories didn't resonate with me, and I don't
Mhm,
like political shows anyway.
mhm,
I like shows about money and stuff like that.
mhm,
But that was the challenges that I thought they'd have been better building it around personalities.
mhm.
But I don't think they had the personalities there.
Yeah.
So, but it is what it is. And I don't understand how they didn't get paid because the guy that owned the platform is a billionaire. But that was one of the issues is that on the way out of the door, the financing fell through.
Yeah,
Yes, ma'am.
it just so I think that BNC is a great case study in business, just period. $50 million in 4 years just gone.
Yeah.
In Black America, how does that happen? Beulah is saying they said OWN was not going to make it. So OWN is a special case, though. OWN was not making it until Oprah did two things. Number one, she brought in Tyler Perry, and number two, she sold it to Discovery. And now
Yep.
we really don't know what, at least the last I heard, we don't know what OWN is doing now because it's underneath the umbrella of Discovery. So,
Yeah,
you know,
definitely. And
yeah.
another thing with BNC is I never would have made it. I didn't know until they closed down that they were television. I thought they
Mhm.
was just on YouTube.
Mm-mm.
Yeah, I
They're
would
on
have never went
television.
TV. It's too expensive.
No.
Yes, I would never did. I think that's where a lot of their money went. It's too expensive to run a TV show these days
Yeah.
when you just
TV
could go on.
station.
You just TV station is too expensive to run a TV
Yeah.
station.
And
You just
and
do everything online.
P. Diddy is having that problem, and Byron Allen is having that problem. Cable is just not it's not lucrative, and there's just so many things that happen, period. So,
Yeah,
if you're
young
Byron
people don't
Allen
watch
and you can,
TV.
yeah, if you're Byron Allen and you can't get a fair advertising deal with the Weather Channel, I don't know who's going to be able to, to break through that.
Yes,
So,
ma'am.
yeah. Now, somebody did ask about your courses and explain the differences. So what I want to do is I want to come to your website,
Okay.
and I'm just going to have you talk through your different
I can just do it on
courses
top of
here.
my head because I know them.
Oh, well, I just want other people
Okay.
to see
Okay,
as
because I put
well.
them in.
So, oh, did I click the wrong thing?
No, you have to find because that's the main sales page.
Main sales page, and
Yes,
then
ma'am.
you
So if
have
you
the
go down to the
different
bottom, the
classes.
courses will be there. You
Yeah,
go right
there we
there.
go.
Okay,
Okay.
so the VIP course is the top tier course. And if you click on the link, it explains everything in the courses, what's in there. So what's in the VIP course and the benefit of that is that you get about 5 hours of one-on-one consulting with me. You also get access to the mindset counselor. So that's the benefit of that, right? The benefit of the core course, which is the 1297 course, you
Here we
get
go.
all the modules, but you also get the 1 hour one-on-one consulting with me. The Living Breathing Trading Plan is a trading plan course. It's like a one-off offer in which we kind of teach you how to compose a trading plan. And then how to cash out on IPO lockups is an IPO lockup course in which we get you to kind of understand the lockup process and how to be profitable. But I want to really give you a heads up on the gate as far as how I instruct and things of that nature. If you're not, I will help you become successful to my best benefit. Can't guarantee anything. I can't guarantee anything except, one day certain things going to happen to us. But if you know from the onset that you do not like to be responsible for your own learning, you don't like to read, you're not inquisitive by nature, this type of content, what I do probably will not be a good fit for you. So I want to really encourage you, because I often, like, part of the recommendation for what we do is I tell you to read 30 minutes every day. If you know that that kind of work isn't what you want to do, I don't think I'll be a good fit for you, because what I'm not a fan of is spoon feeding people. The goal is to empower you to be successful in the markets, and that requires you to take a lot of responsibility on your own success and kind of own your success.
Yeah. So, anything that you want to do well requires effort and input and things like that. You can also, I did it last week. There was a course I really wanted, and I knew that the people would be eventually going up on the course. So I said, let me snag it now, and it's in my queue for when I can pay attention to it as well. So that can be an option for you too. So with that, yeah, so I'm just reading the comments here and make sure I didn't miss anything. All right, well, that's our show for tonight. So hopefully, Dave, maybe in a few months or something like that, you'll come back and we can gossip more about, about the market and some of the other things that we see happening that, we can have commentary about. I enjoyed our conversation tonight.
Yeah, I really enjoyed coming through. I really enjoyed the conversation. And I hope some people got something from it. Hope they got some value from it. And I really enjoyed having the opportunity to speak to your audience. I enjoyed it the first time. I still enjoy it today, because you give me a lot of insight about what's going on, especially from a business standpoint.
Perfect. Thank you so much. I really, really appreciate it. I'm a big fan of your YouTube page. Everybody, his YouTube is Diamond Dave. So you're able to go and find that. And he does a lot of excellent commentary about Black people and economics and the market and things like that. So I highly recommend his YouTube page as well. So, all right, everybody, good night. We'll see you tomorrow night.